Hey, traders. I'm doing a little bit of a pre-trade analysis here that I wanted to share with you guys. However, I already put the trade on, so it's not really a pre-trade. It's kind of a post-trade, but it's a swing trade and it's going to take a while. So here's the plan. All right. So basically, we have month end, and that's rather significant because you're going to have a lot of vested interest right now in a lot of window dressing that's going to go on, and institutions do not want to be selling inventory right now at any deep losses. They're at least the ones that sell to the public, anyways, or that have public clients. They want to make sure that that their performance levels are good, and that's where we're getting this little bounce in the market because there's a lot of window dressing going on, and some people are believing that the Donald's tax cuts are going to happen. Sure, they were promised in August, but yeah, they'll really happen in December. In any event, the market is going a little bit higher here, but it offers a wonderful opportunity coming into month end. Now, if you turn your eye over to this chart over here, what you'll see, the first couple of things I want you to take notice of is watch how long it takes this market to go higher. 1, 2, 3, 4, 5, 6, 7 days to go up to this level here. And it takes 1 day to wipe it all out. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days again. And 1 day, 2 days, 3 days to wipe it all out. 1, 2, 3, 4, 4 days, and then 1 day, 2 days, 3 days wipes it all out. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days? And how many days is it going to take to wipe it all out? Well, my guess is probably not until we get to month end, which is tomorrow. I could not see too much going on at this time. And so I'm not going to say this trade is going to happen as quickly as these ones did. I expect this one to take a little bit longer. I also want to draw your attention to this area over here. This is a balance area. There's a lot of indecision going on here. This is a balance area here. There's a lot of indecision going on here. This market's going to have a very, very difficult time in this area. Now, can it go through? Yeah, it can go through. Will it go through? I don't think so. And I just think there's too much risk out there. Yes, we have potentially some exciting tax reforms being spoken about, but I think there's too much geopolitical risk right now, and we can see very, very clearly the institutions have been selling into this strength, selling into this strength, selling into this strength, selling into this strength, right? We've seen that happening. Now, they've also been buying, right? We've seen that they're buying, but they're a lot weaker in their buying. Do you see that? A lot weaker, meaning it's taking a lot more dollars to move the market higher than it is to move the market lower. The path of least resistance is now down. All right, that's why I believe this is a great trade at this level. I've loaded the boat on this trade. If we break through, even if we break through, we'll probably come back and retest the 144 area. So I don't feel too uncomfortable with it. Like I said, do I think it's going to happen today? I sure as heck hope so, but probably not. It's probably going to take till after the holiday long weekend, and when we come back in September. I think that this is a major victory for a lot of institutions that sell to the public. to dodge these bullets, but do I think they're going to dodge it for long? No. It's just taking too much money to move these markets higher. And you can see, look at these, excuse my language, fucking games they're playing. They're moving it in the overnight session. See that? When it's a lot cheaper. I don't know if you guys are aware of this, but it's so easy to move the markets in the overnight sessions. And that's what they're doing. They're taking advantage of the low resistance and pushing it overnight, right? And they have to do that. And you say, Steve, why do they have to do that? Well, because these moves happened way too fast, and markets just don't move down like that, right? So the landscape has changed. And until the landscape changes differently and we bust through this area with significance, then I'm going to follow the path of least resistance. Okay, now there's a lot of other things that I teach my my students, but this will kind of give you an idea of how you should be thinking. Now, the other thing I want to point out here is a 30-minute chart. Okay, if you ever want to know what institutions are doing, the sweet spot is the 30-minute chart. The sweet spot is the 30-minute chart. Why? Because it's a nice area between very large players who are professionals. When I say very large players who are professionals, I mean institutions that are very big, like pension funds and mutual funds, and the other smaller time frame institutions like market makers, etc., etc. It's a sweet spot chart, and it's extremely powerful. So there you have. There's my free. What's the holiday coming up? In Canada, we call it Labor Day. I think in the United States, I can't remember the name of it right now. There's my free Labor Day gift to you. Anyways, hope you enjoyed that post-market analysis. Looks like a great trade to me with very, very small risk and a lot of reward. And bye for now.